Welcome to SDCERS 2020 Annual Membership Meeting. Thank you for joining us. My name is Jessica Maloney, and I am SDCERS Communications Manager. Now I'd like to introduce Member Services Director Cynthia Queen, who will get us started.
Welcome to the annual meeting of your San Diego City Employees Retirement System. SDCERS manages the retirement plans for the employees and retirees of the City of San Diego, the Port of San Diego, and the San Diego County Regional Airport Authority. We believe it is important to provide you, our members, an annual status report to demonstrate our commitment to you. In years past, we certainly enjoyed meeting with you in person, but we won't let 2020 stop us. Every challenge encountered is an opportunity for growth. Today, our team will demonstrate how we have taken on each challenge and continue to grow your pension fund. We'll hear from Liza Crisofi, our Chief Investment Officer, Marcel Voorhees-Rossmann, our Deputy Chief Executive Officer, and Greg Rodemaker, our Chief Executive Officer. We'll start with Liza Crisofi.
Thank you, Cynthia. Today, I'm going to give you an update on SDCERS's investment returns for the fiscal year. And I thought it would be helpful to start with a look back at what happened in the stock market and volatility during the fiscal year ended June 30th, 2020. The top line of this chart is the S&P 500, and the bottom line is the volatility index, or what we call the VIX. As you can see, we started the quarter ending September with a market that was essentially flat, with a little increase in volatility on concerns over trade tensions with China and slowing global growth. The portfolio was up 0.9% for that quarter. Then we moved into the quarter ended December. And you can see that the stock market was moving substantially higher, and volatility stayed low due to progress on trade talks with China and easing Brexit concerns. So for the first 6 months of the fiscal year, the portfolio was up 5.5%. Then we headed into the March quarter, where the COVID pandemic hit, businesses were shut down, the economy was in disarray, and you had an oil price war going on. From the peak of the market to the trough, the S&P 500 fell 34% in 33 days and was down 20% for the quarter. Volatility spiked to levels last seen during the global financial crisis. The portfolio was down 11.5% during that quarter, which brought the cumulative return for the first 3 quarters to a negative 6.6%. And then we headed into the last quarter of the fiscal year, and we saw a strong rebound in US stocks, with US stocks being up 20%. Non-US stocks were up in the mid-teens. Riskier bonds like high yield and emerging market debt also did well, while conservative US treasuries had smaller gains, and returns in real estate and private equity moderated. Turning to the next slide, we see a change in the market value for the fiscal year, where we started the year at approximately $8.4 billion and ended the year at a little over $8.3 billion, despite all of the volatility and market drawdown. Currently, the portfolio is valued at slightly over $9 billion, which equates to a return of between 5% and 6% so far this fiscal year. Turning to the next chart, here you can see the actual return for the year, where you can see we eked out a very small positive return of 0.5%. But we underperformed the benchmark. Why was that? Well, the biggest detractor was actually US stocks. There was a real dichotomy in the stock market last year. We had growth stocks, which are companies whose earnings are growing faster than their peers, continuing to outperform value stocks, which are companies whose price appears to be undervalued compared to the market. The S&P growth stocks for the last year were up over 17% versus value stocks at a negative 4.5%. Large cap stocks like Walmart continue to outperform small cap stocks like Domino's Pizza. And tech stocks like the FANG stocks, which include Facebook, Apple, Amazon, Netflix, and Google, had very strong performance and have generated an annualized return over the past 5 years of over 41%. And unfortunately, we had one manager with disastrous results in the March quarter that has since been terminated. Additionally, our opportunistic bucket, which is mainly invested in various types of debt, cannot keep up with such strong results in stocks, but has still performed well versus its benchmark since inception. Of course, we are still a long-term investor, and you can see the strong results for the 10-year and since inception numbers. The 10-year return puts us in the top 14th percentile of the public funds universe, and the since inception return puts us in the top 2nd percentile. Turning to the next chart, this slide shows us historical returns by year. And what I would like to point out is that even when we have had negative returns, like the dot-com tech bubble of 2001 and 2002, and the global financial crisis of 2008-2009, look at how many positive years we have had. We have also had a couple of years where we had very low positive returns. But combined with all of the years of really strong performance, gives SDCERS those good long-term performance results. Turning to the next slide, we can see the allocation effect for the year. And this digs a little deeper. And what this shows us is the favorable or unfavorable impact of being overweight or underweight an asset class compared to the benchmark. In this case, this is showing us that we had a negative result by being slightly overweight in stocks at 19.8% versus the policy target of 18.4%. And we underperformed the benchmark. Essentially, that means we had a higher weighting in an asset class that underperformed, and that detracted from return. Turning to the next slide, this shows the selection effect, which shows the impact that active management had on the portfolio. This is where we can evaluate those active managers who are trying to outperform or beat the index in how they are doing. As we discussed earlier, active management in US equities and the Opportunity Fund were the two biggest detractors. And then finally, the last slide shows our long-term asset allocation. As you can see, we have a very diversified portfolio. We look at these allocations in terms of return-seeking assets, which have higher risk but potentially higher return, and risk-reducing assets, which are more conservative investments. In stocks, we have US stocks, non-US stocks, and global stocks, which are firms that can invest all over the globe and are not limited to any one geography. We have some emerging market debt, which has the potential for higher return and adds diversification. Then we also have exposure to real estate, private equity, and infrastructure, which are all less liquid investments, but provide higher returns and more diversification. We also have an opportunity fund allocation, where we're able to take advantage of opportunities in the market. That allocation was recently increased from 8% to 10%. And then finally, our risk-reducing assets are conservative US bonds, where we've given our managers a little bit more leeway to invest outside of the US, but that's still conservative, and that is considered our downside protection. And that concludes my remarks, and I would like to turn it over to Marcel Voorhees-Rossman, who's our Deputy CEO. Thank you.
Thank you, Liza. SDCERS operations staff has seen unprecedented challenges since the stay-home order was issued on March 20th of this year. Our team has met these challenges and found opportunities to continue serving you, our members. Some of these changes have been seamless to you. When we received the stay-home order on March 20th, we closed our offices and sent our staff home. Within 2 weeks, we had 90% of our staff teleworking, and that continues to today. Our offices are still closed to the public and to our members. We also were in the middle of processing our monthly payroll for March when that stay-home order came. We were able to complete that payroll on time and have continued to pay all the payroll since accurately and timely. This included the month of June, where we had a 4 times increase in the number of retirees. One of the things that we track here at SDCERS is how long does it take us to pay our members their first retirement check. For the fiscal year that ended June 30th of 2020, we averaged 21 days from when our member received their last paycheck from their plan sponsor to when they received their first paycheck from SDCERS. Health reimbursements also continued with our staff working from home. Annual statements were mailed to all of our members who have not yet retired, and we continued to process account updates, direct deposit, tax withholding, beneficiary updates, reciprocity, and purchase of service credit. Some of the other changes we made were more obvious. On March 12th, there was a prohibition on large gatherings. That meant that our board meeting on Friday the 13th of March turned into a teleconference. Our retirement seminars have become webinars. Our communications manager, Jessica Maloney, did a fantastic job of quickly getting webinars up and running, and we've had such a great response. Once we recover from this pandemic, we intend to offer both live retirement seminars and webinars to our members. We had health open enrollment also happening during the pandemic. So normally we would have had a kickoff meeting, a live kickoff meeting in Balboa Park. That was turned into a virtual fair, and our health help day was also canceled this year. Counseling appointments also had to change. We were no longer having members come into the office, and all of our counseling appointments have been occurring over the phone. Again, this is an area where we've had great response from our members, and we anticipate in the future we will offer the option to our members to either come in and meet with a counselor or have their counseling appointment over the phone. Perhaps the biggest impact was our call center. When we got that order on March 20th, we shut down our call center. It remained shut for all of April and May. We opened it June 1st, just in time for our health open enrollment. But the most exciting news was on August 18th, we launched our remote call center. So now our staff are able to answer calls from our members wherever the staff may be located. So even though our call center was closed from March 20th through May, we still know we were able to service our members. In March, we processed about 65% of the normal contact tickets we would have with our members. That went up to 80% in April and 90% in May. And since then, it's been holding steady between 90 and 110%. The last change we had to make was our Zoom meetings. Our staff meetings are now Zoom meetings, our periodic meetings with our plan sponsors, the meetings with the retiree organizations, our board meetings, and as you can see, our annual meeting has turned into a Zoom meeting. Our operations staff has taken these challenges and they've found opportunities for growth in the way that we provide services to you, our members. And now I'll turn it over to our CEO, Greg Rademacher.
Thank you, Marcel. Don't put all of your eggs in one basket. Don't count your chickens before they hatch. Whistling girls and cackling hens never come to any good end. A penny saved is a penny earned. A picture is worth 1,000 words. Those in glass houses should not throw stones. Actions speak louder than words. Good things come to those that wait. Slow and steady wins the race. Good manners don't cost anything. And during this election season, if you can't say anything nice, don't say anything at all. These are the sayings I remember from my parents and my grandparents. They were meant to help me make good decisions and navigate a complex world in a simple way. I also remember their sharing some sayings to help me keep out of trouble as a young lad. Look before you leap. Don't burn your candle at both ends. There's no such thing as a free lunch. Birds of a feather flock together. If you lay down with dogs, you're gonna get fleas. And the hardest advice to take at the middle school dance, make room for Jesus. They also had sayings to help instill hope during troubled times. Every dark cloud has a silver lining. It's always the darkest before the dawn. Things will look better in the morning. One of my favorite sayings is, every challenge encountered is an opportunity for growth. This saying serves as a guiding light in times of uncertainty and chaos. It helps me change my perspective away from worrying about nebulous and uncontrollable events and focusing on what is constructively possible with the things I can control. Did you know that SDCERS is a shining example of every challenge is an opportunity for growth? One such challenge was about 15 years ago when the newspapers were awash in stories of the city and SDCERS being under investigation by the Security Exchange Commission, and the U.S. Attorney's Office due to inadequate pension benefit disclosures in a city bond offering document. Additionally, the federal government, the state of California, and the city attorney filed charges against SDCERS officials for conflict of interest stemming from a funding agreement between the city and SDCERS. The fallout was tremendous and far-reaching. The city was unable to borrow money and halted capital projects needed to help our community. A leadership crisis ensued when key city officials resigned or retired. This included the mayor, city manager, the deputy city manager, city auditor, the deputy city auditor, and the treasurer, to name a few. Key retirement officials also resigned or retired, including several board members, the retirement administrator, and the general counsel. Understandably, this governance challenge was overwhelming and long-lived. Some wondered if this was the end of pensions for SDCERS members. It most certainly was not. Every challenge encountered is an opportunity for growth. The federal and state indictments were dismissed. The city attorney did not prevail and was not reelected. The city paid additional contributions into the retirement trust fund. SDCERS was reinvented with a new board, new management team, and a stronger governance structure. The city and members always make their pension contributions in full and on time. Funding policy authority rests solely with the SDCERS Board of Administration, and SDCERS operates with an increased level of transparency. SDCERS growth from this governance challenge was to increase SDCERS' ability to deliver each and every monthly benefit payment to our retirees on time and in full. In other words, increase benefit security for all members. Did you know the independent plan actuary performs a solvency test each year to measure our progress towards fully funding the promised benefits? The latest solvency test found SDCERS having enough money in the bank to pay each and every current city, port, and airport retiree their benefits from now till death do us part. This is benefit security in action. Another example of a challenge was the global financial crisis. In 2008, the global financial crisis decreased the investment portfolio by 5%. In the following year, in 2009, this investment market crash decreased the investment portfolio another 19%. In the following years, the investment market rebounded and SDCERS was once again on the path to fully funding. The market crash challenge gave SDCERS the opportunity to evaluate its long-term investment strategy's risk budget, its diversification, and liquidity to ensure the investment portfolio remains resilient to withstand oncoming investment market cycles. Did you know, over the past 10 years, the investment portfolio has doubled in size from $4 billion to now over $9 billion. In fact, the SDCERS investment portfolio's earnings pay for the majority of the monthly retirement benefits. Over the past 10 years, the investment portfolio paid 62 cents of every benefit dollar paid to our members. SDCERS growth from the market crash challenge was again to increase benefit security for our members, which leads us to today's challenge, the COVID pandemic. Marcella has shown how SDCERS rose to the COVID challenge and continued paying our members on time each month amid the COVID chaos. The SDCERS board and staff overcame numerous obstacles in a way to build new service delivery tools that we can use beyond the COVID challenge. Importantly, we did so keeping our team members' health and safety at the forefront of our decision-making. SDCERS understands and values each team member's contribution because together we can persevere and get through the COVID challenge. Did you know that the SDCERS staff strive to uphold a set of core values in safeguarding and delivering your pension benefits? They are customer service, accountability, professionalism, fiduciary, integrity, and transparency. SDCERS growth from the COVID challenge was to improve our ability to deliver services to our members in a variety of ways. Looking back, Each challenge faced by SDCERS has been an opportunity for growth to ensure we deliver accurate and timely benefits to our participants and ensure the trust fund's safety, integrity, and growth. And that is precisely why your SDCERS team is here. Sending it back to you, Cynthia.
Thank you. My colleagues have described many ways SDCERS faces its challenges head-on this year, and we are always looking for opportunities for growth. The member portal is one of the most important resources on our website. Just like many of your banks and credit cards, our member portal provides highly secure access to your personal retirement account information and the ability to perform transactions anytime via the internet. From our website, click on Member Portal. To register, read the instructions and follow the steps. Now that you've registered, let's see the menu. You can view a lot of information and you can do a number of transactions. Let's take a look at what retirees can access. Most important is to view your pension paycheck. It is more secure to receive your statement online than via paper mail. It is also most efficient and cost-effective. Remember, SDCERS is a separate trust fund. It is not part of the city's general fund. SDCERS Trust Fund pays for all of SDCERS expenses, and those funds must be used wisely. This is our fiduciary duty to our members. Click on the statement that you wish to view, and you will see your full payment summary, including all of your deductions, credits, and taxes in line-by-line detail. Proof of earnings, what's that? It's actually a question we receive weekly. Sometimes retirees are looking to refinance their home or make a major purchase such as an RV. And a lender requires proof of those earnings. So just click on Proof of Retirement Earnings, and you will have a letter with your current income listed. You can either print and mail this to your lender, or you could save and email this. Very useful tool. Tax documents. This is very important to all of us, and we work very hard to produce and post this information as quickly as possible. If you click on tax reporting on the member portal, it will take you to all of your recent 1099 statements. This year, as soon as those statements are available, we will post them on our website for your use. Retirees may also want to update tax withholdings. This can be done for federal or California state taxes. Click on that box, and then here's the really useful tool. If you're receiving a monthly pension, you would select monthly as the payment type. If you are receiving a drop annuity, you would select that from the payment type. Then there are a number of fields where you can enter various designations and then choose Calculate to determine how much withholding would be withheld from your check before you submit that to SDCERS. It's very useful. Keeping track of your beneficiary designations is also very important. When you retired, you made selections that cannot be changed, such as potentially a continuance who would receive a lifetime benefit. However, there is a retiree death benefit that can be updated at any time. If you go to this page, you can ensure that that information is up to date. The most important use of this page is to ensure that your family knows who has been designated so that you can all plan properly for the future. Each November, retirees ask about receiving an additional payment, which is properly known as the annual supplemental benefit and found in San Diego Municipal Code, Section 24.1503. On this page, under Annual Supplemental Benefit, you can view the history of those payments, and if it is paid in November, you would be able to see that current year. Now, active members should also update their beneficiaries, because if you pass away before you're eligible to retire, SDCERS needs to know who to pay those funds to. But of most interest is the benefit calculator. By clicking on the $sign, you can get a glimpse at your future retirement benefit. By entering a few data points, you will be able to see your estimated future pension. You can do this under various scenarios, and remember, you can now apply to retire online. Some members have time available to purchase, such as leave time taken without pay. Access this page to see what time you may have available. You can calculate certain types of service, and click the Request Official Purchase button to have this information mailed to you. Members who are still working and participating in the Deferred Retirement Option Plan will definitely want to register on the member portal to see their drop account progress. Here, you can watch your earnings grow and help plan for the future. And then when you're ready to retire, of course, you'll complete that application online, submit it to us, and we'll take care of the final pieces with you. SDCERS website is packed with useful information, and you can also send us requests online. Since you're already here today, I encourage you to check out a few of the features on our website. If you're not yet retired, watch informational videos to learn about the future retirement planning process. And if you are retired, be sure you have a member portal account. And if you're not already a member of a retiree association, you can access their information under the Resources tab. Just click on important links. Now, we sure wish that we could serve you in purpose and see you all in person. We miss you so much. I want it to be in person. We encourage you to contact us via phone and also online. Please be informed and stay confident, because every challenge encountered is an opportunity for growth. Thank you for watching.